Welcome back, LinkedIn members and friends and everyone in our other podcast. What I want to talk to you about today was probabilities. Everyone's talking about the Bitcoin, I should say potential Bitcoin spot ETF and what the probability is. But do you know there are actually three major events happening by June of next year, practically in just 6 months? If you think about it, because November is basically gone. So basically we have maybe from December to May, or let's just call it June 2024, we've got probability of, like I said before, one, the spot ETF happening, two, the halving calendar, I'm going to talk to you about the halving, and three, liquidity. So let's get started. So Bitcoin's post-halving returns have been getting smaller and smaller. By the way, maybe I should talk about the Bitcoin halving. For those of you that don't know, the Bitcoin halving is one of the most important events on the Bitcoin calendar, but it's not an actual date. It's an estimated date. And it's going to occur around the third or fourth week of April 2024. And this occurs when the block number 810,000 is mined. And when that occurs, that's when inflation rate of Bitcoin is going to drop from around 1.9% to 0.9%. So basically, the reason why it has its name is because the inflation rate at that point in time gets cut in half. And by the magic of supply and demand, that tends to cause the price of Bitcoin to go up. So basically, like I said earlier, the halving returns, however, have been getting smaller and smaller. But what if we get a spot ETF and high liquidity at the same time? And what's the probability of that happening by June 2024? So here's a chart of the halving returns. And you can see, like I said earlier, that the first halving, and that's the top line there, you can see that Bitcoin rose 539 times, just a phenomenal amount. And then you could see over the subsequent halvings, it still went up dramatically, but less than the first halving that I have here. And you can see the little point here in red, you are here. So you can see the potential just by looking at the you are here bullet point. You could see that Bitcoin doesn't just go up at the halving; it keeps going up after the halving. And if you look at liquidity, liquidity is very important. There's lots of ways of measuring liquidity. I have another video on this, but basically, if you're looking in this case in point, if you look at the global change, a lot of people look at M2 money supply of the United States, but this is global money supply. And if you look, and I like to look at that one because Bitcoin is a global asset. So if you look at global money supply, you can see it goes up and down, almost like in a sine wave or a stochastic. And you can see that the price of Bitcoin is highly correlated. Yeah, I'm losing my voice. Highly correlated with the changes in money supply. So Bitcoin prices go up and down with the movements and changes of money supply. And now we're going to talk about exchange traded funds, meaning the potential for a spot ETF. I'm not sure if you know this. We have 12 ETFs that are waiting to be approved by the Securities and Exchange Commission. And these are not small T ETFs. They're from Fidelity, ARK Invest, and BlackRock. So this is huge. And this chart here shows you global assets under management. And as of, I think it was 2021, we have $131 trillion, not billion, $1 trillion in assets under management and conventional assets, meaning non-crypto, non-Bitcoin assets. So just imagine how much of those assets, even if it's 1%, how much that flow from conventional assets to Bitcoin, how much it could affect the price of Bitcoin. But the thing is, what's the probability of all these events, all three events happening at the same time? So in order to figure that out, you calculate what's called a joint probability. And in this case here, it's joint probability is the probability of independent A multiplied by the probability of independent event B. But in our case, we're going to be looking at 3 independent events. And when you consider the joint probabilities, I'm not sure how much experience you have with joint probabilities, but when you consider them all happening at the same time, like 3, it's pretty rare that you get a joint probability much higher than 20 or 30%. Because every time you multiply one probability by another, it reduces the joint probability. So that's very important to think of. So what is it? Well, let's calculate it. But before we calculate it, we need to figure out the probability of a Bitcoin ETF and the probability of rates of the Fed fund rate going down. And I'm using a decline in the Fed funds rate as an example of higher liquidity, right? Because when the Fed lowers rates, it increases liquidity. So the first one on top, you can see from Bloomberg, they're saying, that's the second bullet point, that the spot ETF, they think there's a 90% chance of that being approved by January 10. And that's the window where the SEC can approve the spot ETF. So remember, we're looking for all 3 happening, the joint probabilities of all 3 happening, including a spot ETF by June. So we're going to take 90%, we're going to use that. Even though they're saying it's going to occur by January, we're going to use that for June. So we're being more conservative. Now let's look at the CME FedWatch tool. These are meeting probabilities. So we're right now, the Fed funds rate is at 5.25% to 5.5%. So I'm trying to figure out how to explain this. If you see, maybe I'll put my pointer on it. You see where it says 500 to 525 basis points? That's a lower Fed funds rate. So if you get a probability over here by June, that means the rate's going to go down, because what they're looking at is a federal fund rate futures, and they're figuring out what the probability of rates going down using the Fed funds futures curve. I know this is complicated, but just bear with me. So now what you do is you notice that 500 to 525 basis points is a lower rate than what we have now. So you take that 48.6% probability, and then you add it with the 16.3%, because that's even lower. And so you add those 2 probabilities. You might even want to add more probabilities, like this 9.7% plus the 35 plus the 39. But we're going to be more conservative. We're just going to look at 48.5 plus 16.3. And on the next page, I'm going to show you what that equals. So here we go. So this is a formula, and I've wrote it out for you. So you got the probability of halving, meaning probability of A, plus the probability of spot ETF, and we talked about that already. And then lastly, the probability of a rate cut, meaning probability C. So probability of A and B and C is 100% times 90% times 65%. So that 65%, those were those 2 probabilities that I showed you in a previous slide. I added them together to get 65%. So what do you get when you multiply all those 3 probabilities? You get 58.5%. That is huge, my friend. That is a large probability that all 3 events, independent events, will occur by June end of 2024. Again, this is a very, very high probability. I would have been happy with 30%, but we're nearing 59%. And if there's any increase in a recession, like let's say all of a sudden something breaks, that third probability of 65% is going to go up to maybe 70 or 75%. But we don't even need that because the probability right now is huge that all these three independent events are going to occur at the same time by June 2024. So if that happens, look at this rainbow chart. If you remember earlier, I think I said, I'm getting all the videos mixed up, but I think I said earlier that Bitcoin's pretty high. It's run up 130% to over 38,000. And the short-term indicators like sentiment are saying that Bitcoin could decline. But let's forget about all that stuff. Let's look at it long-term. Even though the price is high, you could see for perspective, we're still in the blue here in the rainbow chart, meaning that we have a long way to go on the upside. And like I said earlier, given that we have such a high probability of all these events occurring within 6 months by June or even May 2024, there's a high probability that the Bitcoin can have a quick run up in price before we get that slower run up. So I think now is a good time to hodl. Whether or not you want to sell Bitcoin. I know if you have Bitcoin now and you've made 130%, why not just hold on to it? You have nothing. You really, in the long term scheme of things, I think you don't have much to lose because we have a high probability event. So, just think about where your risk is and your return. Of course, this video, I should have said it earlier, this is NFA, not financial advice. I'm only here to educate you and entertain you, possibly.